Good morning, boys and girls. Welcome to the Flow Show, end of the week. Another busy week. Can't wait for the weekend. Oh, these weeks are getting busier and busier. You're only 2 weeks in. Bodes well for the rest of the year. Morning, Kate. Surviving?
Morning, Ryan. Yes.
Oh, no, you gone again.
Yeah, it starts again. My microphone. Am I okay now?
Yep, you're all good now.
All right. So good morning, everybody. Good morning, Ryan. I hope everyone is enjoying the last few days before a new era starts.
Oof, yeah, I can't wait. And I'm not, to be honest, I'm not looking forward to it because it doesn't happen until like 5 o'clock our time. So basically, Monday's going to be a write-off, I think.
He might say nothing on day one either. I mean,
Yeah, exactly.
Rumors are plenty, but he may just decide to celebrate the day with Musk and Bezos and whoever else is a multi-billionaire or trillionaire in the market.
Yeah, and start whacking balls off the balcony, golf balls off the balcony. See if he can hit the monument. Right, anyway, let's get away from the silly stuff. We can focus on that later. Let's get into what's been going on. China, surprise, surprise, they hit their GDP target for the end of the year. Not only that, they beat their GDP target for the end of the year. Q4 coming in at 5.4%. Who'd think they got problems over there, eh? Their year-to-date number, which is basically effectively their full year target, as I say, was hit at 5%. So people like to talk about Chinese data being fiddled and manipulated and whatnot. You can take that as you like it, but it's been very rare where they've missed or we've seen their GDP numbers missing. That's a big one for their population, just to show that they have a target and they can meet those targets. Anyway, as I say, you wouldn't know that they've got problems over there. Retail sales were better as well, 3.7%. Industrial production was better. Everything's looking better at the moment, we shall see. The only thing that wasn't better was the unemployment rate rising to 5.1%. As you can see there was the National Bureau of Statistics press conference, as you can imagine, coming out and waxing lyrical about hitting their targets. So all's fine and fixed in China, apparently. Not that you'd know it from the currency at the moment, which is still looking very weak. Anyway, moving on. Japan. Japanese household inflation expectations. The percentage of people expected prices to rise a year from now edged up to 85.7% from 85.6%. A year expectation for inflation is expected to rise by an average 11.5%. That's up from the prior call of, I think, 10% seen previously. However, inflation for the longer term, 5 years ahead, 82.5% of people expected prices to rise. That's down from 83.6% in the last survey. So long story short, still got some high percentages for inflation expectations, so still good news for the Bank of Japan. We've had a couple more sources pieces out on the Bank of Japan. Reuters dropped one earlier today, which looks like a bit of a rehash of the one we got yesterday, saying the BOJ is likely to raise rates next week, barring any Trump-driven market shocks. Says there's no major change expected to their guidance on continued rate hikes. The Nikkei was out as well not too long ago, saying that a lot of BOJ members are leaning towards a hike at next week's meeting. Dollar yen, though, looks like it's we're bored to tears with the sources pieces at the moment. Obviously, BOJ getting pushed down the agenda ahead of Trump on Monday as well could be a reason, but we're not seeing as big a reaction now in yen. At least algo moves when we get these sources pieces. So as usual, Kay, the market getting numb to those headlines.
Yeah, absolutely, Ryan. I think we are now turning our attention to Trump first, and then the Bank of Japan, right? Um, Yeah, I mean the range that we thought that may start to form has formed for now. Probably dollar still too big to break materially lower, also against the yen, but the yen still doing pretty well on the crosser side. So that's probably the Bank of Japan impact or potential for hiking rates. It does seem that quite a few things are falling into place. So it makes sense what those watchers are saying or those sources are saying that barring any Trump surprise against Japan, there is a high possibility that they hike next week. Yeah.
Yep, absolutely. And then the next question should be how much they hike by.
Yeah.
And yeah, it's a tough one. It's going to be coming in the midst of all this Trump stuff.
Mm.
So I don't know. I think you've got to look at things. We could have a really huge move in dollar yen if Trump isn't as tough on all his tariffs and stuff, and the Bank of Japan hike. We could see the dollar yen taking a bit of a tumble. Conversely, they could hike 50 basis points, but if Trump's going massively on tariffs and whatnot, we could still see dollar yen rising. This is one of those times where everything is on the table next week. You know, you can forget trusting your tech levels to a certain point. You know, don't be looking at anything probably in a 200 pip range and relying on it. It's going to be a sit on hands and probably see how the dust settles after. Do you think?
Yeah, and you know what? Trump would actually like Japan to hike and try to put the yen a bit stronger as a result. And because they are one like well, although he manipulates everything himself, he wants all the other currencies to be a bit stronger versus dollar. So he would love the Bank of Japan to hike and dollar yen come off.
Yeah, unless they hike 10 pips, and then we'll probably be trading at 160. So yeah, we'll wait and see. We'll wait and see. Right, moving on from Japan. Over at the ECB, we had the ECB minutes out. Not that there's much to take from those. A couple of notable comments that I pulled out saying that some members noted that a case could be made for a 50 BP rate cut at that current meeting and would have favoured more consideration being given to the possibility of such a larger cut. So that was countered, though, by some saying that a 50 BP cut could have been perceived as the ECB having a more negative view of the state of the economy than was actually the case. I don't think the ECB should be doing 50s at this time of the cycle, do you, Kay? I mean, yes, we know the economy is not doing well, but they have got rates. Well, rates never got as high as everywhere else, and they have come down a good chunk as well.
Yeah, absolutely. Yeah, I agree with you. I mean, there's no reason unless there is a real shock coming from Trump. That's the problem is now that you 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 can any central bank anywhere is now waiting for what's going to happen with the Trump administration, and assuming that stuff would be a bit how shall I say a bit softish. Um, they don't need to do any big ones now. If he goes like he slaps Europe with a lot of restrictions on car makers, with tariffs left, right, and center, yeah, then there may be a case for ECB to try and shore up the economy really, rather than fight inflation. It's going to be a case of do they need to support the economy, and in the state where Germany, France are in. If he really goes hard against Europe, they may actually have to do it, but that won't be for any other reasons than the Trump administration. The rest does not support really hefty cuts one after the other.
No, I agree with that. But yeah, my view coming into this year is that they will have to take rates lower unless there's a meaningful pickup in the economy. If there's not, I can see things getting a bit worse, and they will be forced to go stimulative rather than just getting out of restrictiveness. But that we'll see over the months ahead. ECB Stornoas says easing should continue with a series of cuts. So he's probably one of those ones that were calling for a deeper conversation on a 50 cut at the last meeting. UK retail sales, more good news for us over here, and the new Chancellor and all the fiscal measures. They're resulting in a whopping minus 0.3% in headline sales, core sales down 0.6%. Both were expected to rise. Worse revisions to last month as well. So for the big retail period, November and December, it's looking very, very soggy, and that's not good news. And again, that just ticks another bearish column for the UK and potentially for the pound, and just increases the pressure on the new government to get growth moving. But those numbers not looking good at all. We're now looking at potentially, well, the market's pricing in around about 65, 75 basis points of cuts now after that. So we're getting those cut expectations rising again. We do have Bailey speaking later on today. He's speaking at some Bretton Woods thing, 5 p.m. UK time, and then something else at 9 p.m. Not sure if there's any Q&A. The subject matter of the speech doesn't lead itself to think there's going to be any big comments, but while the speech may not contain anything directly, he may want to touch on some of the market moves and what's going on with rates anyway. So if you're still about this time or later on today on a Friday afternoon, 5 o'clock, instead of being in the pub, keep your ears peeled for that one. Right, going over to the US data that we had yesterday, a lot of numbers out. Starting with retail sales, which were all fine and dandy. Some minor misses of expectations here and there in a lot of numbers, but overall retail sales coming in pretty solid. Some of the numbers, as I say, the taking ex-gas autos, that came in a bit softer, but the control group, the core sales number, came in at 0.7% versus an estimated 0.4%. Similar reaction we got after that data as well, with the dollar looking like it was okay, and then we saw it coming off. Initial jobless claims was out as well. Nothing to see there. Still sticking around the 200k mark. Continued claims 1.8 million. Philly Fed blew the doors off. That came in a whopping 44.3 versus down 5 expected. All numbers pretty much blooming in that one. Investment 39 from 22.2. Employment up as well, 11.9. New orders, some heavy lifting there. Prices paid up as well. So going pretty much the opposite way to what we saw from the Empire State numbers earlier this week. I don't know. It looks like a big number that might have some one-off factors in it. Maybe there's some bit of front-loading tariffs and that sort of thing going on. Don't really know. There wasn't much in the report to give any indications on that. So we'll have to see what happens next month. But good numbers, nevertheless, goes into the situation that we're seeing in the US as well. NAHB housing market index also rising, 47 from 45 estimated and 46 prior. So that's good news as well for the housing market. We get more housing data, or we start to get some housing data as well shortly. Business inventories, minor number there, showing a 0.1% gain. What did you make of that data yesterday, mate? And the dollar getting a bit of a tapping, shall we say, on the back of it.
Yeah, I think the front loading is probably a decent explanation. Sorry, a big jump in new orders amongst the higher numbers. I think that's probably indeed some front loading there on the Philly Fed. Yeah, for the rest, we said it. I mean, the On the retail sales, the US consumer is still there, but yeah, but we also said like whatever whatever we see as data now will have to be benchmarked against the data for the coming months. And I guess that's why also the market only reacted for a short while. I think most of the people are now kind of done, and also think that the numbers, the data to come are going to be much more important than the data of periods that we just had. And yeah, this Philly Fed, I think I was expecting CPIs and PPI to be a bit higher as well for the end of the year. Um, but perhaps those numbers are a better reflection of it, of this front loading. And it's a bit strange that you got like such a big jump in prices paid as well, and it did not show up anywhere in the PPI or the CPI. So maybe those are still to come for the January data or so. But yeah, I think the market is just waiting now.
Yeah. So my question to you is: you think that PPI and CPI didn't show a jump? They both went up. Both measures. They may have missed
Yeah, yeah.
expectations in some aspects, but they both went up. There was no disinflation in any of those numbers at all. Yeah, you can look at the super cores and the bits and bobs and whatever, but the headline numbers, apart from that core number coming down a pit, both went up.
Yeah, I know, but I was expecting a bigger jump. Let's put it that way.
Okay, yeah,
Yeah,
cool.
on the basis of that front loading, that I was expecting a bigger number. And also, if we look at then the market reaction, as I said, I think the market is really now waiting, and it is all kind of sort as expected, but we.
You've dropped.
I mean, I'm so sorry. I don't know
Huh?
what I made updates and everything. I don't know what to do about my audio. I really don't know. But anyway, yeah, I think the market is now has acknowledged a lot of that front loading and is just waiting for what to come.
Yeah, yeah, I agree with that. Mr. Waller decided to pop up on CNBC, and he's really taken a dovish slant. He says that CPI data this week was very good. Said if numbers continue like this, it's reasonable to think that cuts could come in the first half of the year. Says if there was a surprise like last year, the Fed will have to stay on hold, but he's optimistic disinflation continues. Then he got uber dovish, more so than we saw last week. He says he doesn't think March can be completely ruled out, but that the data could disrupt that. He says if the data cooperates, 3 or 4 cuts could be possible this year. So some of the strong jobs report in December was a make-up from earlier week reads. He says it may be more. He says he may be more optimistic on inflation than his colleagues. He started getting a bit dovish at his speech, as I say, a week ago. I think it was last Friday, if I recall correctly. But he's really gone to town on the dovishness in these comments, and certainly destroyed my dollar yen long try yesterday. For one thing. We also had Fed's Muslim out saying he sees a patient approach to rate cuts. Fed's Hammock has just popped up a few moments ago saying there is still an inflation problem in the US and that monetary policy is only modestly restrictive. So we're getting a bit of a chasm growing between Fed heads and where they see things at the moment. But a big dovish sounding Waller K. Do you think he's maybe just been sent out to temper hawkish expectations?
I don't know whether he's a good mate of Powell or not. Well, yeah, could be. It was a bit surprising the dovish tone that he had. They shouldn't, but are there any political considerations behind this speech? Who knows,
Yeah, exactly. Yeah, he certainly caused a bit of ruckus in markets, which we'll look at a moment in a moment. Right, Mr. Trump, his team are reportedly getting ready some wide-ranging sanctions that are apparently going to facilitate the Russia-Ukraine deal, and at the same time will put the squeeze on Iran and Venezuela. And interesting that these sanctions supposedly going to lead to a deal between Russia and UK. We'll have to see what those are, but that's just another sources piece dropping out from there. Mr. Besant, at his Treasury hearing, says that to revive the American economy, or they're going to revive the American economy through pro-growth regulatory policies, reducing taxes and unleashing American energy. Drill, 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 baby. He says China has not made good on agricultural purchases for 4 years. This is the deal that Trump originally negotiated. China hadn't been playing ball under Biden. Says we'll talk with Trump on the make-up provision for China regarding those. Says the US is not going to default on debt if he is confirmed, which is not to be said that they will default on debt if he isn't confirmed. He also threw up a strange comment, a strange number, saying that the theory says that 10% tariff hike means 4% currency gains. I don't know how they're going to measure that one, but that certainly got the dollar jumping a little bit at that point. Anything you read from Besant?
I'm really surprised about that comment. How can you say that 10% is going to have a 4% impact on currency on some currencies other than the dollar? It may, if you slap tariffs on Mexico or China or whoever they don't like, but I really can't figure out how we came up with that number. But I think the market also understood that it was a bit of a stab in the dark on that one, because it had an impact, but then everything stabilized again. Well, I think all in all, he's probably going to be confirmed. Is he? Is he not? There's little other candidates straight away to take up the job. So unless Trump has got somebody else in mind straight away, but he's probably going to get the job, at least temporarily. Oh, did we lose Ryan this time?
Oh, yeah, no,
Yeah.
I mean, I forgot to push my button. Yeah, moving over to Canada, and 25 of 31 economists see a 25 pip cut coming from the BOC on the 29th. 6 of those, the remainder of those, see them staying on hold. And I wonder if those thoughts will change, because Mr. Mark Carney has formally announced he's running to become Canada's Liberal leader. So we could see him in charge of Canada at some point. What a journey he's been on. Bank of Canada to BOE to private whatnot, so now politician. So that should be interesting times ahead from Canada. Right, that's all it from the news front. Kay, anything else?
No, not past news. I just looking ahead, because obviously next week I'll be off, by the way. But next week we have that big event with Trump's inauguration. But just on an aside, there's also going to be the 3-4 days Davos meeting going on, and long ago are the days where we had a Kuroda laughing his brains out when he announced QQQE in Japan.
Yep.
So I think it's going to be pushed to the back against Trump. There is no match for Trump inauguration. But just know that there's a load of money. I mean, a load of big investors and fund managers going to be in Davos. So we may actually get a few comments on what Trump has to say while he's at his inauguration meetings. So yeah, just want to keep in mind to see what the fund managers have to say about what Trump has to announce.
Yeah, whoopee. Nothing I like better than a big shindig full of finance ministers and central bankers and fund managers. Oh dear, I think can I come with you to Belgium, mate? I can.
Yeah,
I'll be
I
your
mean,
driver.
yeah, please do. We can comment from offsite, you know.
Yeah, we'll take the show on the road. We'll do it from the ferry across to Belgium. Right. Anyway, let's get into what's going on in prices. Dollar yen 155. Been talking about it. It hit it. It bounced from it. Nothing more to say there. It is what it is. The levels are doing what they should be doing. We've had a little bounce. I've got this silly, I don't even know why it's in there. It's just one of these little tiny levels, 155 70s, but we're knocking around there at the moment. Obviously, 155, 95, 156 is going to be the next level. But I don't even know why I haven't got a line in there. Let's just chuck a one in there. That's going to be the next level should we climb above here. Obviously, we have some bits and pieces on the way, 156 and a half, or 35, 50-ish, whatever you want to call it. But the big level will be up towards 157. So look for some resistance probably coming in around maybe 80, 85 before we get into that 157 level, if we are to go there. If we break under this 155 level, though, it's probably going to be driven by some news. We've got little data out later of note. So it's going to probably be headline driven as much as anything. Now, one thing you need to note, we're seeing this bounce from 155. Okay, we've had a breakdown in yields, and this has pretty much been part of the catalyst for why we went down to 155 in the first place. We had this break for 63, 64, 65, and we haven't really bounced from it. We had a little bounce, but we're down near those lows. But dollar yen is looking a bit more bid than it has done previously in following yields. So maybe, and I've just noted it the last few days, there's been a bit of deviation, bit of divergence between some of the intraday moves in yields and intraday moves in the dollar. So I expect there's a big risk that all these correlations and relationships might break down, or risk of breaking down over Trump and whatnot. The big level is obviously 450. It's been a huge level previously, big level on the way up. It's been supportive. Well, you call it supportive, but it's resistance if you're looking at it in price terms. So that's up at 109, 108.28 in the price feature of bonds. So that's going to be the resistance level, the 450 in yield. So it's going to be a big level if we get there. Again, all bets are off come Monday as far as that's concerned. Cable, mooching around, still looking pretty weak. We had this breakdown on the data back under 122. It's struggling to get back above, but we're still just not doing an awful lot. Still a tight range, 121, 123, messing around in the middle. Still looking very bearish compared to where we've been previously. Still, you need to keep the context of the fact that despite how bearish we are looking, this is a big old area. This is going to be a big test for this move from the 134s. So intraday, still not looking too bad, but further out, we're still in a big downtrend, but we're on a big, huge support level that needs to be respected. You know, if we are going to see a significant bounce, this is the sort of place that it could well do it. If not, if we're carving through there, something's gone horribly wrong, and then all bets are off, and who knows where we're going from there. Who was it? Dimmy wanted to look at the FTSE, which I've been keeping half an eye on. IG was out with a call earlier this week. They see 9K coming for the FTSE, which, given its performance and how slowly it moves, I did ask them what sort of timeline they were looking at, whether it was this decade or the next, but we are potentially having a decent move up here. Now, a lot of the FTSE moves can be subscribed to what happens in the pound, given the fact of the amount of international companies involved in the FTSE. But technically, it's looking like a break at the moment. We've had this range going on for quite some time, and now we're looking higher. If you look at something like the all share index, which is more reflective of domestic stocks, that's also moving up. Kay, are we just seeing the same old easy policy, good for stocks move here? I mean, certainly with the data like the DAX and Germany, you wouldn't be buying stocks on economic performance.
No, I think maybe prospect of a bit lower rates. We also sometimes see an inverse move on equity markets when the currency goes a bit lower. There may be like some case of a bit of rebalancing going on as well, but I think it also has to do with the market being a little more relaxed on the bond market, and that may explain this move now. Uh, is there a bit of rebalancing going on as well between U.S. equity markets and European continent? That is also, but there's a good few reasons why. Also, if you anticipate that Trump may be a bit more relaxed on the UK being his European continent ally from historically, that may also underpin the UK assets, right? And I think it's a bit of a mix of this whole scenario, or potential looking forward to, that is ongoing now, and sometimes it's just a case of momentum funds. Look at those little moves that we had. You know those three green candles there. You have it from the low, yeah, on your picture right there. So you go back to the left a little bit. Go back, go back, go back, go back, go back. Yeah, there. And so you see the kickstart. So it goes up like one notch, then it consolidates, then it goes up again. It looks like somebody has a bit of a program there going on. Sometimes the price action can tell you a lot about what's going on behind the scenes. It does look like a bit of a program, that one. So it's no, Brian, I'm not in the drives thing, but it does look like a bit of a rebalancing and a bit of a program at the same time going on there.
Yeah, I mean that's quite a hefty move.
Yeah.
Just the last few days. Technically, we've got this break. It's looking, we had a little bit of waffling around. Then we're holding it. Ordinarily, something like this, I'll be looking for a break trade. Because if you do get a break of a big wide level, then usually it does have some legs. I'm not overly sure about this one. I think if you get another test, maybe we have a little look at 85. Maybe we hold a first test. If we get a dip down to that 84.75, that break point, and it holds, that might be a bit of a trigger if you're looking to get long. But Dimmy, you're looking at it. Let us know what you're doing in it, mate. Are you long below? If so, then I hope you're riding a good trade. Otherwise, let us know what you're doing in that one and what you're looking at. But yeah, I'd keep an eye on this one if he does confirm the break with a retest of that 84.75 level. Mike, you want to know about euro dollar and Aussie dollar? Let's go to euro dollar at the moment. It's doing nothing really. Same sort of picture as cable and the dollar pairs. We've had the low, we've had the bounce, and now it's sitting, give or take, near enough in the middle. It's still looking like it might have stopped going down, but again, like a lot of other pairs, the bounce has really been not a lot. Nothing that suggests you should be piling into longs here for a run to 105 or anything. But it's getting a bit more supportive. We're still holding this 50, 70 zone. We have dips under, it holds, and it comes back and we hold it again. So while that picture develops and we keep doing that, that gives it the a bit of backbone to then maybe go and push a bit higher, maybe get up to 104 or something like that. If we're coming under here though, then it's going to keep this pattern going where you get these swings going on, but the bearish trend continues. Aussie dollar, bit similar, very similar. The big level for that for me is still up at 62, 70s, 80s. That's the big one. Same picture though, we've had a bounce, but we can't build on it. We're sitting in this traffic that we had before, just going sideways. One I am keeping an eye on is my old Aussie Kiwi. We've had a couple of tests now, this 111, and we keep failing. We failed twice, 3 times so far this year to have a go. Okay, but we keep coming back and we keep knocking on the door. So it's looking to me that there's more chance of a break than not. And I say that even while I'm short. So you've always got to be objective with your trading. No good just talking your book and wishing and hoping it goes your way. You've got to respect what the price action's doing, not what you hope it might do. In the interim, 110.50s, 60s is the level. If we're getting back under there, then maybe we see a bit more of a dropout after these failures. But we know where we've been limited to the 110, 110.20 area. But I wouldn't be surprised if we get a break up, if we have another move up and keep knocking on that door. Euro sterling, and then I shall bang it over to Mr. K-Man. Obviously, the poor data today is no good for the pound. And as I say, this one is more reflective of what's going on in the quid than perhaps cable is. Still keeping this 84.20 zone as support. Not quite getting up to another look at that 84.60 zone just yet. So unless we're getting under this 84 area again and then chopping through some of these lower levels, it's still going to look pretty short-term bullish. And but big test coming up if we're getting up to 84.80s, 85s. Mr. K,
Yeah.
take it away.
Okay. I was just when you were looking at the Aussie, I was looking at the longer term picture, the daily stuff. This is still looking pretty weak. This Aussie dollar in the medium term. And Ryan, as Ryan says, 62.70 is the first hurdle. We can't hold it right now. So that's still a bit of a worry. But a lot will happen here as well next week. Because we have been musing about this in our chat room as well. I mean, next week you just throw all the charts away and start afresh on all the pairs. But it could be. But in the meantime, for as long as you're not going to retake those levels, it's still looking like look at that. I mean, this is a weak bounce. Ryan was making the analogy in the cable where we dumped like 6, 7 big figures and we have like a one big figure, 1.5 big figure, jump back higher. I mean, this is similar, right? And we're in all of these kind of scenarios when you look at the dollar versus the majors like the euro dollar, the cable, the Aussie, and the Kiwi. Yen is a bit of a different thing because you've got the Bank of Japan and you've got that relationship between Japan and the US, not only in military or Pacific Zone cooperation, but also Japan being one of those being the biggest investor in the United States as well. So yeah, on the longer term, it's still looking very weak. We are going to have to break back above. That may come if Trump really goes soft on China. I think then the Aussie could see a jump in sympathy, right, Ryan? What do you think about it? Is the Aussie going to be affected by anything that Trump is doing, or is it going to be right on its own?
Aussie's going to be a funny one. Yeah, for the US dollar side, obviously it can be a mover. But if he goes hard on China,
Yeah.
that is a
Well,
potential negative for the
oh
Aussie
yeah,
dollar.
these things. Yeah. I completely agree. This thing, if he goes really hard on China, I wouldn't be long Aussie. I did buy a bit of a call for a 1 month call in the just as a surprise trade if you wouldn't go hard on China at all. But yeah, I'm not having any cash in the Aussie. Because if he does go hard on China, as Ryan says, it's probably going to dump down to 60, even 59, 59.75 or so, probably first stop. Right, traditionally, yesterday, told you 27 and a quarter around. This is where we had prior high lows. We went to meet it, and now we are consolidating. I think right now we are in as on all the metals, but especially gold, silver being the main ones. I think we're in the waiting room for what's going to happen next week. I think, well, just personally, I think it may be sort of enough hedges in place, and now we wait. So I would think that we are going to trade perhaps in a bit of a range here, even see a bit of consolidation. For those who are long, I would not like to see a drop under 26, 60, 70, but we can't rule anything out. And but for next week, gold and silver will likely, that's what I think, at least again a different um, potential move in them. Gold is probably going to outperform silver if Trump really goes very hard on tariffs, and the opposite, obviously, maybe through as well. So gold underperforming silver if Trump is really soft on tariffs, because then the market won't need as much of hedges. But for silver in turn, it could mean that we finally go for the break and go higher if Trump is really soft on tariffs. Being an industrial metal, this is going to need better global growth outlook conditions than gold, for instance. So, if you're trading next week, one of the metals, bear in mind that different outcomes in tariffs may have different outcomes for the one metal against the other. They will likely not go in the similar way, in a similar speed. That's what I think about those two. Um, and next week, I told you yesterday, we are going to have to look at this one, this dollar mix. Next week is going to be a big week for mix. We are knocking against on the 21 door. This is Wow, if he goes really hard against Mexico, and there are rumors flying around that he's preparing from the off very hard words against or actions against migration. So this could go for a walk, and we were talking about that months ago. When Trump saw himself elected, and even before that, the mix would suffer. Okay, we have already done a fair bit, but if there would be any really hard measures against migration and the wall, and against Mexico, this is probably going to be 22 first stop. So be prepared for next week. And in turn, if he goes really soft in the first sessions of his new tenure, watch what's happening around 2030, 2040, I would say, and then around 20, the big figures. So really 21 is going to be your key, whether it tops around there or whether it comes down. So for the time being, we're trading inside this wedge, but this is probably just going to be exploded next week. So be prepared for big moves on the Mexican peso. If he goes really hard, 22. If he goes really soft, a retest of 20, and then we will see what goes on. If Scheinbaum manages to soften Trump's administration, it's not only Trump; it's the people who he surrounded himself with as well. But if she manages to soften them up, watch out for the medium-term dollar mix, because we could gradually start to come off back lower. Now, what else? Is there anything else you guys want to look at? Oh yeah, I had a bit of a look at the oils this morning as well. We saw this break on oil, and then we're stopping here around a very interesting zone as well. Had a little overshoot up to 80, 70 or so, but this is the resistance zone going into next week, 80 and a half, let's say, 80 and a half, and the underside is the broken trend line around 77. So watch this range in crude oil, US oil next week, but especially watch what's happening in Brent, because That's where most of the Russian oil is traded in, and also depending on what Trump says to Europe as well, because we know that Europe is Norway's biggest client, and that's also expressed in Brent. So what's going to happen with Brent? We stopped around these 83, 82.30 around here. There's another bit of a level around 83. And on the underside, well, 80 is a bit of a middle of the road kind of thing, but watch what's happening around 78, 78 and a half on Brent next week, because any hard or soft tone could see this one really move quite hard as well. Okay, so watch those two levels: 83.20, 82.40, 83.20 zone on the top side, 79, 78 on the downside in Brent. They should be on the move. Okay. So those are things for the watchers of energy. Those are two things that you should be watching as well. And with that, Ryan, back over to you, mate.
Thank you very much, mate. Great stuff as always. I just want to finish the show with just a little bit of advice, if I can. There's some of you who are in this show watching us, whatever, who may not have been trading 8 years ago when Trump first came in. Okay, we've been talking about the risks around this. They may not happen, of course, but as traders, it's wise to look at the worst possible outcomes or the biggest risks to our trading, to our accounts that we can look at. So if you haven't traded through this sort of stuff before, there's nothing wrong with pausing your trading. Okay, account preservation is going to be key. Now, I've been doing this for many, many decades, as has Kay, as has people like Blake and everyone else. And by and large, we're all talking about really not looking at any trading while this happens. So if we're doing that and we've got all this experience, you need to think about what you should be doing over this big risk event. Okay, let the dust settle, find out what happens, learn whether markets are going to change moving. All the correlations we've had for the past 8 years going to break down. Are there going to be new correlations? How are markets going to move? Is what he says going to be good for the dollar, bad for the dollar? We've had the market's interpretation of it until now, but the market's reaction might be completely different to that interpretation that we've been trading for the last few months. So it's going to be a hectic one. Be careful. You can always trade a couple of weeks later time. Okay, don't get desperate to trade, and be careful of your charts, your tech levels. He doesn't give a shit about tech levels, and neither do the bigger markets. So just be careful. If you have to sit back, sit on your hands for a while, do so. Come back when you have a better grasp on things, and that's what I want to leave you with this week.
Well
anything
said,
to
Ryan.
add to that, Kay?
Yeah, well said, Ryan. And watch out for Trump. He's painting the saloon doors. I mean, whatever you see one moment cannot be true the other moment. This could be going 200, anything could be going 200 points up, and the hour later back down 200 points. So be very careful what you do and protect your account.
Yeah, exactly. And that's that for the week. Thank you, everyone, for coming to the Flow Show, sticking with us, supporting us, giving us your comments. It's always good to speak to you guys. And we'll have a show on Monday, obviously. Probably won't be a long one. Kay's not here, and there'll be nothing much going on, touch wood, until Mr. Trump. So we'll get through what's coming up next week anyway. Have a great weekend, everybody. Stay safe. We'll see you next week.